Hey, what's up? I wanted to put together a supercut of all of the great AI, machine learning, and analytics snippets from Tesla's fourth quarter 2021 earnings call that happened just this past week. It's really exciting to see. I think that we can definitively say that Tesla is an AI company, is going to become a software company, and Elon pretty much said as much on the earnings call. So let's talk about some of the key AI and machine learning components that you should be paying attention to over at Tesla. Let's go over to the whiteboard. Okay, so area number one talked about full self-driving capabilities, FSD. So the Tesla fleet, or a big chunk of it, is going to be able to drive itself autonomously. Right now it's still in beta, but they foresee being able to roll it out to a broader group with just a simple over-the-air update, which is going to be amazing. So what happens when that becomes more regularly available? A lot of questions around what that unlocks, new opportunities like Robotaxi. So the concept that you can allow your car to act as a taxi while you're at work, for example. That's really interesting. So that's FSD. And they also talked about another big item here, the Tesla bot. So the idea here is creating humanoid-like robots that leverage deep learning and neural net technologies to do different types of things. And so they would prototype these robotics within the factory floor and then think about releasing that commercially to folks. So that is kind of interesting. I think that's a little bit more far out, but they are seriously talking about that. And what does that do to labor? That's a big question. I don't think we're really ready for this. These two, I think, are going to be big time game changers. But that wasn't it. They also talked about Dojo. So Dojo is Tesla's supercomputer that is optimized for deep learning neural nets. They are leveraging that for FSD, and they're probably going to leverage that for Tesla Bot. But I think the idea here is to open this up to other folks that want to leverage that technology. So they're almost going to act as an AWS. So I would imagine that just like AWS, you're able to plug into their GPUs. You'll be able to do something similar with the Dojo, the supercomputer that Tesla is developing. That's really cool. And then they're also changing the insurance industry. Okay, so they're offering insurance to their drivers based on metrics in terms of how safe they're driving their Tesla vehicles. So based on how safe they think you are, they're going to give you a premium on insurance. So those four areas are really huge. Of course, there's a lot of great stuff in the earnings call around manufacturing and logistics and factories. But what I did is I put together a supercut of all of these segments where Elon and his team were talking about these key areas. So I hope you enjoy it. Check it out. And if you like that, please subscribe and please share. Talk to you soon.
Full self-driving. So over time, we think full self-driving will become the most important source of profitability for Tesla. I mean, actually, if you run the numbers on robotaxis, it's kind of nutty. It's nutty good from a financial standpoint, and I think we're completely confident at this point that it will be achieved. And my personal guess is that we'll achieve full self-driving this year. With at a safety level significantly greater than a person. So, the cars in the fleet essentially becoming self-driving via software update, I think might end up being the biggest increase in asset value of any asset class in history. We shall see. So we will not be introducing new vehicle models this year. It would not make any sense because we will still be parts constrained. We will, however, do a lot of engineering and tooling and whatnot to create those vehicles, the Cybertruck, Semi, Roadster, Optimus, and be ready to bring those to production hopefully next year. That is most likely. But like I said, it is dependent on are we able to produce more cars or fewer cars? In terms of priority of products, I think actually the most important product development we're doing this year is actually the Optimus humanoid robot. This, I think, has the potential to be more significant than the vehicle business over time. If you think about the economy, it is the foundation of the economy is labor. Capital equipment is distilled labor. So what happens if you don't actually have a labor shortage? I'm not sure what an economy even means at that point. That's what Optimus is about. So, very important.
Over a longer-term horizon, we are quite optimistic about the expansion of margins, though. From the hardware side, we are aggressively driving manufacturing innovations and operational efficiency to reduce cost. And with the rapid development of FSD, software-based profits will ultimately become a strong addition to the profits generated by selling hardware. So congratulations to the Tesla team for a terrific 2021, and thank you to our suppliers who supported us. Looking forward to another great year.
I'd like to just second the thank you to suppliers. A lot of suppliers work very late nights, weekends, vacations around the world, and we're very grateful for that.
Thank you very much. Let's go to the Q&A from the investor side. The first question was on 4680 cells, which we already answered. So let's go to the second question. How is the progress of the $25,000 compact car? Can you give an update?
Well, we're not currently working on the $25,000 car. At some point we will, but we have enough on our plate right now. Too much on our plate, frankly. So at some point there will be. But I think that's sort of a question that it's sort of the wrong question. Really, it's really the thing that overwhelmingly matters is when is the car autonomous? At the point at which is autonomous, the cost of transport drops by, I don't know, a factor of 4 or 5.
Thank you. The next question is Dojo on track for summer 2022? And what challenges, if any, are you working through? Is Dojo necessary for FSD to operate better in cities like New York City? Or on a separate note, where should we expect the first implementation of Tesla bots in your factories?
Okay, there's a few questions in there. Big 6 questions. Yeah, Dojo appears to be on track for doing something useful in the summer of this year. I think the threshold that really matters is at which point, when does it become more competitive than a GPU cluster for training? And obviously the GPU cluster is getting better, so it's a moving target. But that's the goal I've set for the team is the FSD team running our GPU supercluster needs to tell me that they want to use Dojo instead. That's a obvious sort of threshold. I don't know when that will. It's like I wouldn't say like success is 100% certain here. I think we just generally want to overestimate eating options and underestimate ourselves. But it does seem as though we might pass that threshold next year with Dojo, if we execute well. Dojo is not needed for full self-driving, but it is a cost optimization on training vast amounts of video data. Cost optimization also a rate of improvement. So if you can train models faster and have a shorter iteration interval, then you can make progress faster. So, like not everything can be just distributed to a zillion deep GPUs. So there's some element of serialization there. So, and then if Dojo is competitive, then it does seem like the kind of thing where we would offer it to other companies that want to do neural net training. This is very much a neural net training optimized system. But in theory, it should be better than a generalized computing platform, or say GPUs, which were not really intended for the pixel shaders, not directly intended for optimizing training of neural networks. They just happen to work better than CPUs in most cases. So you can think of like Dojo as like a giant ASIC, optimized for neural net training, especially video, or video-like things. But as like I said, we're not saying for sure Dojo will succeed. We think it will. We would encourage those who think this is an interesting problem to join Tesla. So.
Thank you. And the first use of Tesla Bot, whether it's in the factory or elsewhere?
Yeah, the first use of the Tesla Bot, Optimus. The Optimus name seems to be sticking, at least internally. Optimus Subprime. Like if we can't find a use for it, then we shouldn't expect that others would. So the first use of the Tesla Optimus robot would be at Tesla, kind of like moving parts around the factory or something like that.
Okay, thank you very much. And the next question on insurance. When do you plan on having your insurance service rolled out in all the states? International rollout timing in markets that have Tesla insurance, what kind of uptake rates are you seeing?
Yeah, we currently offer Tesla insurance in 5 states in the U.S. 4 of them are telematics, which is Texas, Illinois, Ohio, and Arizona. And then California, which has a more standard insurance offering based upon regulations there.
It should be clear, like we're pushing very hard for California to change the rules to allow informatics, which basically means that you're as safe as your driving is measured. So I think the current California rules are contrary to the best interests of the consumers in California, and should be changed.
Yeah, and that's evidenced by what we're seeing in Texas, where we've been in this market now for about 3 months. And what we see in the data is the frequency of collision by folks who are given a feedback loop on how they are driving is quite a bit lower than the frequency of collision otherwise.
Yeah, and we give people direct feedback on whether driving is safe. And if they drive safer, their insurance costs less, so they drive safer. It's great. It encourages Tesla insurance with informatics and real-time feedback encourages safer driving and rewards it. I mean, monetarily, it's great.
Exactly.
Yeah.
And so we see that so far in Texas. Take rates have been quite strong. We measure this on the conversion rate from when folks quote to see what their monthly rate would be at the starting point to what percentage of them purchase. So we're very encouraged by the interest that we're seeing in Texas. And then we've had enough history in Texas to see what does the loss ratios look like and how do the economics of the program work. And, we're on the right track there as well. So we're comfortable with what we've seen in Texas to move as quickly as we can to scale this across the US. Specifically on the question about when we will be in all states, this is a slow process because of insurance being regulated at the state level. And so we have to go through each of those processes with each of the departments of insurance at each state. But our internal goal here by the end of the year is to be in enough locations that 80% of our customers within the US could choose to sign up for Tesla insurance if they wanted to. There's a lot of uncertainty around that based upon the regulatory processes, but that's our goal. And then as we make more progress rolling out in the states and each incremental state becomes a little bit less effort than the prior, that's when we'll turn our attention to the Europe market. We might be able to do that by the end of the year, starting to get work on Europe by the end of the year. We'll have to see how we progress in the US. And we obviously as a company are going to be driving to increase margins as much as we can, but I just want to be realistic that we're launching 2 factories simultaneously here, and it unavoidably will add cost to the business as we do that. And as we look further out, and Elon mentioned this in his opening remarks as well, the software portion of the business, I think, is the one to really pay attention to. As full self-driving features get rolled out to more and more folks. I mean, for me personally, I prefer to drive my car with the FSD beta on. I think as more and more people experience that, take rates there, and then as we work towards the Robotaxi space, there's actually quite a bit of upside on margins from a software perspective.
Yeah, I think basically everything pales in comparison to the value of a Robotaxi or full self-driving. Everything, that just tends to overwhelm everything. You just go from having an asset that has a utility of perhaps 12 hours a week for a passenger car to maybe around 50 or 60 hours a week. So a 5x increase in the utility of the asset. The cost didn't change. So that's where things it's kind of blows your mind.
Thank you. And the last question from investors is, Elon mentioned level 4 autonomy could be achieved this year. Is it based off initial FSD beta rollout experience, or is level 4 ability predicated on Dojo being complete and online?
As mentioned earlier, Dojo is not required for full self-driving. It should have a positive effect on the cost of training networks. It's not just a question like does you get full self-driving, but really it's kind of like the march of nines of reliability. Is it 99.999% reliable or 99.999999%? This gets nutty. So we obviously want to get to as close to perfection as possible. Frankly, being safer than a human is a low standard, not a high standard. People are very, very lossy, often distracted, tired, texting. Anyway, it's remarkable that we don't have more accidents. So so actually being better than human, I think is relatively straightforward, frankly. How do you be 1,000% better or 10,000% better? That's what that's much harder. But I think anyone who's been in the FSD beta program, I mean, if they were just to plot the progress of the beta in interventions per mile, it's obviously trending to, a very small number of interventions per mile. the pace of improvement is fast. And there are several profound improvements to the FSD stack that are coming, the next few months. So, yeah, I would be shocked if we do not achieve full self-driving safer than a human this year. I would be shocked.
Yes, thank you for taking my question. I have two, please. First, you spoke a lot about FSD and how the economics could be very attractive going forward. I'm wondering if you could just share what your current attach rate might be for FSD on your vehicles, or how to think about the progress of your attach rate or revenue in FSD, let's say in 21 versus 20, and how much deferred revenue for FSD was drawn down during the year. And I have a follow-up, please. Thank you.
I think the FSD stuff, you really don't want to be looking in the rearview mirror. It will not be a good indicator for the future. You need to look out the front windscreen. Because it is such a profound step change. Effectively, long term, every car will have FSD. And the value of that will be a very big number. It's like, you just look at this as asset utilization, and you have a passenger car, which normally is driven maybe 1.5 hours a day on average, maybe 10 hours, 12 hours a week. A lot of cars in parking lots. So we're spending money not just driving the cars, but storing them all over the place. We can get rid of a lot of parking lots if you have a car that is operating all the time. There will be a challenge with traffic. We've got like this little tiny baby company, the Boring Company, which I initially started as a joke, and now, but now I think it actually could be quite essential to alleviating the insane traffic that will happen when cars are autonomous, because you reduce the pain of travel and you reduce the cost of travel so dramatically that there will be a crazy number of cars on the road. It's going to be, I think it will be cheaper to go point to point with a Robotaxi, which is an autonomous Tesla, which every car we've made in the past 3 or 4 years will be capable of that, than a bus or a subway. It'll cost less than the subsidized value of a bus ticket. So people are not going to take the bus. If it costs you, I don't know, for argument's sake, $2 to travel 10 miles point to point, nobody's taking the bus, especially in cold weather, or it's dark, or maybe a little bit dangerous, or hell with that, door to door. People just do not understand how profound a change this is. It's not like some little feature. It's like the most profound software upgrade maybe in history. Millions of cars suddenly have 4 or 5 times the utility than they used to have overnight. I don't actually know how to quantify that financially, except that it's some big number.
Okay, thank you for that. Elon, I was wondering if I could just follow up and ask you, you talked about your product roadmap and also your goal to keep growing at 50% per year or better. That would put you at 3.2 million vehicles or more in 2024. And I think you made reference to Cybertruck, maybe being 250,000 vehicles. If there is no $25,000 vehicle being worked on, is it really realistic to think that you can sell more than 3 million vehicles with 2 very high volume cars and Cybertruck in 2024? Or how do we think about that, or what else is missing in that equation?
Yeah, I mean, it is apparent from the questions that the gravity of full self-driving is not fully appreciated. If an asset has 5 times more utilization than in fact, it's like dividing the cost of that asset by 5. So if you have a $50,000 car, it's like having a $10,000 car all of a sudden. But maybe better than that, because still you don't need anyone to drive. So the person can be engaged in productivity or amusement instead of having to, onerously drive through traffic. So it's probably better than 5 times. I don't know. Yeah. I mean, basically, if the cost of our cars does not change at all, we would still sell as many as we could possibly make.